Good afternoon, everyone. Great to see you all this afternoon. Welcome to the PivotBoss Premium Trading Room here. This is the monthly market outlook for the month of September. This is Wednesday, September 1st, 2021. If you are not familiar with PivotBoss, I am Frank Ochoa, also known as PivotBoss. I wrote a book called Secrets of a PivotBoss a while back that has received tremendous praise from traders all over the world. Let's bring this over this way. We're going to be taking a look at the markets here from a higher time frame perspective today. We're going to be looking at the futures first, various stocks. We're going to look at industry groups. We're going to talk some seasonality. If you have any stocks that you'd like me to check out, please be sure to type it in the chat box there, and I'll get to them when we have some time here. But we have some pretty good stuff here to look at here today. But number one, welcome. We have a new month upon us now, and this has been the month to date, or the year to date rather, data here for the ES, the year to date data. So we have the first trading day of the year there, and we have continued to trend steadily higher throughout the year so far. Tremendous strength. If you're here because you know me from my book Secrets of a PivotBoss, you know that one of the concepts we talk about in the book is the higher value relationship, where you have a pivot range that's higher the next month than it was the previous month, and then higher the next month than it was the previous month, and then higher the next month over the previous month. That creates kind of a staircase effect here, where the markets can kind of create kind of a buy the dip opportunity off that zone time and time again. You pull back, you bounce. So we've seen a very, very well structured trending market here for the ES. You can see we have a higher value relationship that has developed yet again, and currently we're trading right at the previous month's close. So first trading day of the new month is done. There it is right there. It traded just shy, or finished just shy of the previous month's close, came just shy of hitting the previous month's high. The idea here, and you can see how this thing's played out each of the last 3 months. You can look at the last 4 months even. But an early pullback here, a big bounce, or bounce, a bigger pullback, and then a bigger bounce. Over here, very similar. A little quick drop into the pivot range and a bounce, a deeper pullback and a bigger bounce. This one fell shy of the pivot range here, got a bounce off the previous close, a pullback and go. So each of the last 3 months have had that similar blueprint. Not likely to continue that blueprint over and over again, but until proven otherwise, it's another one to watch here. If we see another quick pullback into the pivot range, say into 44.75, 44.80, that might provide a quick push to new highs. If we see a broader pullback later in the month, that may provide a bigger pullback down the road. But so far, in terms of market structure, this thing remains bullish. It continues to trend higher, and any buy the dip or any pullback is a buy the dip opportunity until proven otherwise. The last thing we'll talk about here is this key range. That key range right there is the key range that developed in July. It has basically paved the way perfectly to the upside targets. We talked about the first one being 44.65 and the second one being 45.45, and we've gotten each of those targets now. We may have come shy by about a point or so on this upper end, but we'll likely get it proper here pretty soon. The next key range could be the next pullback that occurs that gives us a good impulse move, or we could use this one here, that impulse pullback, that 4-day pullback, almost near that range, 100% key range target as well though. So very bullish overall. I did want to show some seasonality as well with regards to the ES. This is year to date right now, and this is current price, or current time right there. And we just had our first trading day of the month for September, and we're right there. And look at the month of September as it goes into October. You tend to see, at least over the last 5 years, a period of sideways price action that can happen. And then you also tend to see some sort of pullback that occurs in October here that can tend to be a buy into the end of the year. So that's kind of the blueprint we're looking at right now. We're coming into a period of time here where we have a holiday, a market holiday here in the United States on Monday. So that's volume and volatility could come down a bit heading into that event. Coming out of it could be also something where it quiets down and then we start to pick up a little bit toward the end of the month and into October. Again, any October pullback could be a great last buying opportunity heading into the end of the year. If we look at this on the 10-day, or rather a 10-year look back, you'll notice that again we have current price right there, and then you have this range that comes off and extends off to the right, and that basically takes you into October here. It's a little bit, perhaps a little bit of this pullback here that comes in early October, and then it bounces. So again, the fact that we're up here near highs, this thing has been trending tremendously. We could easily see some sort of impulse pullback early in September, a bounce back up, and kind of just hold here in this range as we finish out September, because this market, again, very, very strong, very difficult to sell, very difficult to buy as well. Now, while we're on the topic of seasonality, let's take a look at crude oil. This is a 10-year look at crude oil. We can bring it down to a 5-year look as well, very similar. Let's squeeze this here. So it's a 5-year look right here. And then if we bring it back out again, we're back out kind of to a broader 10-year view, which kind of normalizes the recent price action a little bit. This right here is where we currently are. And then here's the peak of this seasonality, which is, I'm trying to draw a straight line. Let's do it like that. It's around the middle of September. So we have a little bit of sideways action that could happen, maybe a little bit of a bounce that could happen, but around the middle of September here tends to be the high heading into the end of the year, as this thing typically trends lower throughout the rest of the year. Something we've looked at in the trading room as well over the last several days and last week. But one thing that you'll notice here as well is we have a very clear upward channel, or this channel that's downward sloping upper trend line here across the highs, and we're right near that upper line up there. We're coming into a window here where seasonality tends to weaken here, and you see weakness here into the end of the year. Again, seasonality is only a tool. It's not perfect every single time. But when it comes to something like crude oil or like some of these commodities that can be very honed to kind of the seasonality trends, this is something to consider here. We have a little bit higher, so maybe it hits the 70-27 key range midpoint. But at this point, if it can't get much higher than that, we may be looking at another move down within the channel, and that could also coincide with some of the weakness that we tend to see heading into the last quarter of the year. So crude oil right now, one to watch with regards to seasonality. Middle of September tends to be about where we top out. If we're up here near this upper trend line and starting to show rejection, we may already be seeing rejection right now. So that's something to consider as well. Let's take a look at that right now. If we're looking at this from a very short-term perspective, a couple of levels to watch. This key range high right there, and that is basically 67.98. That's a very important level. The bottom of that range is right here, basically. So that's your price distribution right there. This is your upper line up here. You know, maybe it comes across there. your lower line, something like that. So coming into the middle of September here, right there's the middle of September, right there. This is about the point right here where it tends to top out heading into the end of the year, and then it tends to drop the rest of the year, or at least show some sort of primary weakness. How far do we go based on that? We don't know. You know, value is here on a 5-year basis. That's 52.90. Are we going to drop all the way to 52s? I don't know. But what we can do is quantify this current range, or the range that develops. We can quantify how far price might move if we were to move out of this range on a 1 week basis. And we can also use today's range, which was kind of an impulse move, to forecast what could be ahead. And a couple of interesting levels pop up. Number one, based off of this range right here, so today's range, the impulse move of the day, you get this range right here off to the right. It's the high and low of the current month, but since we only have 1 day to the month, then we get those readings. And one thing you'll see is right here, 65, that is the 100% target to the downside. 65 is the 100% target to the downside. That's also the key range low here. So if we were to break this range to the downside, then we have at least a move down into 62 that could be ahead, followed by what could be a bounce right back up. Give me one moment. So right now, that has been a very important level right there, the 65.02 key range low. When we reclaim that level here, the idea was that we could bounce back towards 70.27. We got very, very close, and now we have this day here hanging in the balance. So as we look into this from the short-term perspective, today's midpoint will be very, very important, 68.18. It looks like it closed just above that level by a few ticks here, 68.22. If that level goes offered, or we start to see some pressure down through there tomorrow, we may see a downward break, and 65 will be the next short-term target ahead. So if you want kind of a template, one thing we looked at in the trading room today was this as being kind of the template. A weak close against the mid, a tail at the upper end, tail at the bottom end, and the next day fails to hold above that midpoint, which triggers the next wave of weakness. So that's going to be something to watch. 68.18, how does the market respond to that? If there's a failure to hold that level early on, or we're trading well below it, the next move could be easily down. And with regards to this channel, that could mean coming down to a new low here below 61.74, which takes us into $60, which is the CLVN right here. That $60 level could be the next magnet on this chart ahead for this market. Now, 58 is another level we're looking at here. That's the previous quarter's low. Previous quarter's high here, previous quarter's close here, all rejected. And then right there was holding the previous quarter's mid until it gave it up right there. That break can tend to open this one up. It stopped in midair at a very significant 62 support level and now back up. So today's range, I believe, will be very important throughout the course of the first week of trading for September. And 65 could be that downside target. On the upside, it's 71.36 as the upside target. So that might be, a mid-month move into this high, and then we'll see what happens. So right now, keeping an eye on today's range for extensions heading into the near-term trade. Let's take a look right now at the NQ. Again, very similar to the ES, the NQ trending higher very nicely. Very strong breakout from this near-term range right here. That was a 20-day compression. You got a breakdown first and a catapulting move the opposite way, rejecting off the previous month's close, stair-stepping move higher, and now we have a higher value relationship for this month. A great CLVN where the breakout point was. So we could be looking at a pullback as deep as 15.2 for a shot at pushing this thing much, much higher. something that could take us, into 16K very easily. So say it pulls back to 15.2, 15.2 to 16K would be a very, very solid target up ahead. It'd be very similar to this type of move right there. A failure to hold 15.2 opens up the previous month's low, and in that case, you have this D-shaped profile. 14.4 might be the best spot to watch for rejection at that point. So the next two buy zones here that stand out in the chart, 15.2 and 14.4, each of those could lead to very good bounces. Again, we never know which one will be tested. Maybe none of them. This thing may travel higher right away. But for the most part, early rejection at the pivot, at the edge of the PivotBoss pivots here, opens up a pullback, and we could continue higher in a very steady fashion. So, buying the dip still is the way forward here from the perspective of the ES and the NQ. If you look at something like RTY, this one looks a bit different, right? This one's gone sideways here for many, many, many months. This one has created very good D-shaped profile right here. It has created very definable edges so that we see very strong reactions at those edges. And as you would normally see, you see chop near the middle of the range here, which is where market facilitation happens there. And now, after the second rejection in a row at this edge, we are very close to coming up here near the highs. The recent break on this day, that day right there, looks like a transition day where you're transitioning from one market structure price zone here to the next, and holding 2250, holding 2245 at the lowest here suggests more upside toward 2335. So that's what we're looking at right here, is that breakout day was very significant. Can it hold a pullback as deep as 45 or 50, which could then catapult this thing into about 35 to 40, at which point we're at the edge and we may be looking at another fade across the range, because again, when you're in a very mature trading range like this, fading the edges is the most beneficial approach, because you get multiple attempts to fade 10, 12, 14 rotations, but you only get one true breakout. So looking to fade the edges within the D-shaped profile, usually the most prudent approach. And if this thing were to reach these highs, we'd be looking for some sort of major rejection that would bring us quickly back to 22.25, which is kind of that mid zone of the range. Okay, let's take a look here at a few stocks. We're going to start with Apple right now. Oh, one quick question here, which is a good one, and since we're just on that chart, let's take a look at that for a moment. Is there a seasonality chart for the NQ? The answer is yes. There's seasonality for everything, because basically seasonality is an average of what it's done month over month, year over year. But some things tend to move more seasonally than others. We tend to talk about those times throughout the year here, and especially in this monthly outlook. One of the things we talked about with seasonality is Apple, for example, at this time of year, and we're about to jump on that chart now, but July here and then August here tends to be two of the most bullish months for Apple. And Apple is a very big component to the NQ, right? Actually, that's not even it. The beginning is like here, and then the end is like there. So Apple's a very big component of the NQ, and you can see that the NQ tends to go up quite a bit during this time. So we were just about to get into Apple, and that was a very good question there based off of seasonality. So we'll look at the NQ here. You can see again the tendency. We just came out of the most bullish period for Apple, and in turn this is a very bullish period here for the NQ, as you can see. And whenever that happens, there tends to be an early pullback in September. That pullback can tend to kind of hold prices here a little bit, and then again when you see an October pullback, some weakness in October, that tends to be the buy the dip heading into the end of the year. This is again a 5-year view. What's interesting about this 5-year view is look at where we are against the 5-year average. I mean, we have been hugging this chart almost perfectly when it comes to seasonality. I mean, you start the year with strength here, a little bit outpaced, and then you get your pullback here. You got a quicker pullback, then you get your bounce here, and you get your bounce there, and then this thing just continues higher. So it has been right on the money with regards to seasonality for the most part already 8 months through the year. The guess is that it will follow fairly closely heading into the end of the year. And where it may deviate is, I believe it will deviate in terms of intensity, because we've already seen that, which means if we pull back here, it'll probably pull back a little bit deeper than you would normally see, and then when it rallies, it might come up here a little bit higher, than it sees, or maybe it rallies here. This one might be a little deeper, and then it finishes here. Over here, for example, there's a normal rally. It was here first and faster. This is the normal pullback. It was here lower and faster. This is your normal rally here. Again, it got there faster and higher. So a little bit more volatility compared to the average, which you would normally expect. And but yes, right now tends to be a little bit of a top in terms of the NQ from that perspective. Okay, let's take a look here at Apple. Now, something we looked at Apple each of the last 2 months was seasonality. And here is July, and then you have, so right there is the beginning. So that's that's the average. This year, not quite outpacing that by any stretch, but Apple was pretty solid. We'll look at that in a moment in terms of the real chart. But this is what seasonality looks like, at least over the last 5 years. Very strong during this period of time. This time it started very strong, and then it proceeded to go sideways for a while. We got a recent little breakout, which made it look good. But here's the piece of seasonality that tends to come into play. Is after you do so well for these 2 months, and if you include all of June, that's a 3-month move that is the best for Apple. If you want to own Apple, own it between June and the end of October, and you've done quite well for yourself. But on this pullback here, which is a September pullback, that can tend to be the lowest point here ahead of what could be an end-of-year rally. So when you're talking seasonality with regards to Apple, it tends to be very good against its typical seasonality. And if we are to believe that seasonality, which why wouldn't you believe it? It just is. It's data. Doesn't mean it's going to be like that perfectly every time, but that's the data. And if we look at the chart here, you can see kind of across these highs, you can see kind of across those lows. You can see a sell signal today. So today developed a sell signal right at the previous month's high price. Yesterday developed a sell signal based off the extreme reversal. We're right at the upper end of this trend line here of the channel. Are we about to see some sort of September pullback? And I'm not even saying it has to do all that. But what if it did? This is the beginning of the new quarterly pivots would be right here in October. What if price did drop and in October we're down here? that could be the ultimate buy heading into the end of the year for Apple. So basically a 135 type of retrade might be the best entry heading into the end of the year. So typically speaking, your best 3-month stretch is right here. There's your June low. Very strong July, mostly sideways August, but it finished strong. And when you look at the totality of the move, it was right in line with what we've been discussing heading into the summer with regards to seasonality here. Now again, we might be overextended in the near term. It may need some sort of pullback. And if so, just looking out and using the quarterly pivots for the last quarter of the year, down here might be a very good pickup for an end-of-year rally. So some thoughts right here on this one. But for the very least, if this is going to pull back on a short-term basis, a pullback to the midpoint of the previous month's range could be in play. That right there is about the 149s, 148.78. And right now it was 152 close. Here's your today's mid is 153s. So you want to stay below that mid on a closing basis in order for this short-term pullback to occur. Once you get that short-term pullback, it may continue right on up. This has been a very bullish directional chart, so in order for this to be a big rejection, it needs to really show signs of rejection early and fast. Otherwise, it could just be a quick 2 or 3 day pullback followed by more strength ahead. Right? 3-day pullback, 3-day pullback, 3-day pullback, 3-day pullback, and each time it's bounced. So that's the midpoint. If we close above that tomorrow, we're headed much, much higher. So that's Apple there. I wanted to talk Tesla as well. Some of the ones we tend to talk about very often because lots of folks have interest in them. Tesla's one of those candidates there. You know, I've mentioned this one as a breakout candidate for a couple of months running now. The reason why is right here in Visual Trader, where you have these composite PivotBoss bands there. You can see the compression of the bands here recently. They were this wide, and now they've compressed inward this wide to be much more narrow. And that is what I call pinching of the bands. That is somewhere where price has compressed so significantly against what it was trading to, and now we may be at a point where expansion is imminent. You know, something like this here, where it's come to a point so far, and then something is imminent where we're about to see expansion. We haven't seen that expansion just yet. I mean, it's gotten to the upper boundary a couple times. The first time we talked about it was here. We got an early move to begin August, but it just stayed in the range. That's one thing about these, is they can go sideways a lot longer before you see that expansion. But just think about the move that this one can have. When we talked about this one last time, we were trading exactly 650, which is exactly value. And I mentioned if you were just to buy it right here at 650, it could be a double to 1300 down the road. Now, it could be a double. If you look at this back in here, that's 900 down to 550. That's 350 points. That's a 1250 point target. Just using this back end. Plus 50 points puts you at 1300 for the double. If you look at history on how this one trades at times and explodes and trades and explodes and trades and explodes and now trades, the volatility signature here is getting wider and wider, that the next move will likely be tremendous when it's ready and in due time. But it's had much of the year to go sideways and compress. That's a ton of energy in the tank. The next move could be to and through 1,000 down the road. So again, one to watch here is Tesla, and which brings me to the group in general. We'll talk industry group rotation. You can see over here I have a group called EV vehicles. Currently, it looks like 10 candidates that are in here and growing. I remember when this group basically had one candidate. It was called Tesla. And then you had something called a NEO. right? And then all of these stocks started to blow up a little bit here, and now you have many more candidates in the group to provide a much more robust group. If you look at the EV vehicles composite, so by clicking this, I get the composite of all of the ones that are inside that group. You see a composite that's very similar to Tesla. You know, big growth. You know, Tesla probably dominates this group, obviously, in the way it looks. But the compression is clearly there. And again, this is one that at some point in time will make that move. Does it need a flush first? I always like a flush first. If it can flush down first and grab a 70, for example, this thing could be headed back to 120 very quickly. So it's always a question about when you have compression candidates. When is it going to break out? Because it can still trade in the sideways another quarter before that move comes. But I think we're closer to the end than the beginning, and that's why I continue to mention these. So if I go back to the group now, several I wanted to point out. Obviously, we just talked about Tesla. Another one here is NIO. I remember when NIO first opened and went from like $2 to $10 in the first day or something. Eventually, it was trading $1 before it exploded post-pandemic. Now you can see after the huge move, you know, even just if you call it $5 to 65, I mean it's just a ginormous move. You've now seen this phase of compression and kind of a digestion of that price move. $30 is kind of that level, like, you know, the composite 70 that we were just looking at. $30 would be a big level for this one. I thought before that this one might have a little bit more of a jump already, but it just couldn't go, so it's pulling back. S3 is here. You have $30 there. If this one can reach $30, that could be a great longer term entry back across the value range and perhaps even much, much higher. So this is going to be one to keep an eye on. The other one here I wanted to talk about is Workhorse. This was a more speculative idea. It's not going to hold the value like a Tesla. It's not going to have even the growth of a NIO. But it does have the initial volatility and speculative movement of an early NIO. You know, NIO is much more farther along now and has a much more mature chart. This one still finding its legs. But what I like about this one is that, you know, again, when this group starts to move, they tend to lift the boats in the group unless something bad's happening to that particular stock. But this one today, is that today? That right there was a bearish outside rejection. And it was a very strong top as well. So a very strong top right there and a drop. That strong top occurred right at S3. This line right there is S3. That's VWAP. That's R3. So that is 3 standard deviations below VWAP, and you got a strong rejection at that level. That means that that level is a very important level now as a pivot. Because now whenever price is able to break back above that level, it becomes a floor to jump back off and rally. So that's a really good level right there. It's below S3. There's a bit of a bear trap that could develop down here. Obviously, you know, for this type of a candidate, you have to be careful because it is very speculative. It could easily go to $4 before it goes anywhere higher. But I am intrigued by that pivot top. The fact that it's below S3 and that's where the pivot is. You know, that's where it turned off of before and doubled. So if this one can find, say, a lower low rejection and then start to find its way through that 10 half pivot, there could be a very quick move that takes us back up the range, back toward VWAP on a speculative basis. And what I mean by that too is, if, for example, this were to work out and it does bounce, take the money. Take the windfall money, take profits. You can leave some on the table if you want, but take the money, because this type of move can end up being that very quickly. This type of move can be that very quickly. You can see it dropped. Some people got in. Oh, that doubled, great. And then you don't take the money, and now it's back to your entry. So you got to be sure on these speculative ideas. Take the money if you get that windfall move. Right now, this is one I would say that is, quote unquote, in the oven. Not quite ready, but in the zone where it could be a candidate soon. Now, I do want to talk about one that this would be similar to. So if you're looking at this one as like, wow, can this one really bounce? I would point you to one that we've been watching here called BTBT. This is one from the crypto group. So I got several candidates or several components to the crypto group there. This is one of them. We added it, and it was trading down here below S3 in the $4 zone. And I mentioned that, if we get a pop in this crypto group, this could be an intriguing candidate, because we're below S3. We're kind of at our lowest lows we've been, and if it were to pop just a little bit, you get a double right away. And then if you get back to value, I mean, you're making much more than that. Eventually, it went from that $4 to just above $20, and it did it in about 2 weeks. But the very next day, or maybe 2 days later, it was up 100%. At one point there, it closed a little bit off that, and then it exploded here. So this is a candidate that's kind of similar to that workhorse group one. It's a very speculative candidate within a group that's moving, right? And let's look at crypto, by the way. Here's crypto. This is another one where last month I mentioned that MicroStrategy could be a breakout candidate. It was trading about 625, 650 or so. It broke out immediately over the first few days, and then right back into the range. Not quite ready yet. The one I am intrigued about, which just won't go just yet, is Riot Blockchain. At some point, this one's going to be a very good one. It's ready to get back above that $40 level. 20's down here. We have kind of an ascending look to this one right now. Something's got to give down here first, maybe a shakeout of some sort. But whenever it's ready and it can break through 40, it will open the door to 60 very, very quickly. You're basically going back into this range. So right now you have that kind of ascending wedge that's developing, that compression phase, and at some point, bam, it's going to make the move to 60. And, we're trading 36.5 right now. That's almost a double just for there. But think if it can get to 30 here. Can it shake out to 30? 30 becomes a good 60 if you hold on. Do we get some sort of move back to 20? Does it have to leak here first before it goes? That might be too good to be true to get a 20 here. But that would be closer to an S3, which is currently rising. So I am intrigued by this one. Again, this is another one that's in the oven, that's not quite ready. But man, once it gets above 40, I think it explodes to the upside and goes quite a distance. Okay, I also wanted to talk. Oh, not that one. Here, let's go over here. This is one here that may be due a bounce this month and perhaps over the next 4 to 6 weeks. This is BAND. Some of you in our trading room will know this one. We've been talking about this one for a few days. We have kind of this expanding range that's happening right here. It takes out the high and then it drops, and then it takes out the high and it drops. Same thing down here. It takes out the low and it rallies. And then over here it takes out the low. It hasn't rallied yet. So we have a potential rally that could be ahead out of this one. That's the framework right there. A few good things to like about this one. Number one, great CLVN right here. 100 to 102, a great CLVN. Here's your D shape, and the other side has a great LVN as well there. The other thing is that blue line right here is the previous quarter's low. And so far, here's the previous quarter's high, previous quarter's close, previous quarter's midpoint, previous quarter's low. Took this one offered, tried to hold, took that one offered, dropped it to the low, and now a narrow range at the lows. So this could become a bear trap below these lows. Very soon we may reclaim prices back above the previous quarter's low. The previous quarter's low is 107, 107.01 to be exact. And as soon as it can reclaim 107s, there's a shot to bounce quickly back toward about 120, followed by what could be a 140 move. So that's the idea for this one. And again, this one could be about a 4 to 6 week mover if it can get above 107 and hold. Could be a nice move ahead. This is BAND. Another one that we've talked about here that's very similar to BAND is Pinterest. This one is already kind of bounced, so again you can see a little bit the expanding nature of the lower edge down here. You take out this low and bounce, and then you take out this low and bounce, and now you've taken out that low and you're bouncing. So I do like, again, whenever you reject at an edge, that's the quarterly, the previous quarter's low. Nice little rejection at a CLVN and you're bouncing. This one has to hold this blue line on a retest. It can come down here and retest down there. I guess that's okay. It'd be much better to get a higher low and start working higher through 57s as soon as possible to get this one going up. This one's dealt with quite a bit of weakness here, especially after earnings. This whole quarter has been completely bearish. But we've seen this ball game before, just like here, and then it made its recovery, just like here, and it made its recovery. So again, if it can hold 55, 54s, there may be a good shot to quickly bounce back toward about 67, 70, and then maybe across the range toward 80 for this one. So that's one to keep an eye on there. That's Pinterest. I wanted to talk a little bit of bots. This is one, I don't remember if I mentioned this one at the last in the last monthly outlook, but this is one we talked about a few weeks ago in our trading room. Bots is one that tends to get on these tremendous trending phases. It's this is the Robotics and Artificial Intelligence ETF, and it just appears that whichever funds are in these just continue to add every month, add, and it just goes up, up, up. And this one recently has gone into a slumber for about 7 months, 7+ months. And this month it finally got the breakout. We started talking about it as it was getting that initial breakout move. And now, once you break out from a multi-month range, there can tend to be many months of multi-month trending action. So, this is the first month up, then you get the higher value relationship, counter trend bounce, higher value relationship, counter trend bounce, and you could be looking at 2, 3, 4 rotations of strength. That's for a normal case. But when you go sideways for 7 months and then break out, or 7.5 months and then break out, there's 5 to 7 months of action that could be ahead. And then you add to that the fact that when this one gets trending, it will trend for many, 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 many more months than normal before it breaks that phase. So you can just kind of go back in its history, and the very first time we noticed it was back here. Maybe it was after the summer here, after its first, and it just kept going. Then it trended down. Obviously, after this lower low failure, it's been nonstop to the upside. So this is going to be very interesting. Can it stay above 36? If so, we could be looking at major trending moves ahead. If we cannot stay above that 36, 35 to be safe, then you work your way all the way back down across this range. So this is going to be interesting to see if it can stay. When we look at this one in Visual Trader with the composite bands, you see here a pinching phase right there compared to this width, and then a significant breakout. That looks like it could embark on a very tremendous bull trend. Again, if it can continue to hold that breakout point. So that's BOTZ, bots. Here's CPNG. Now, I have a Chinese group here that I look at in Visual Trader, and for the most part, they are just completely destroyed. A lot of weakness across the board. They have tried to bounce here a little bit. This one is, I don't believe it's a Chinese stock. I think it's, I want to say a South Korean stock. It's like South Korean Amazon, for the most part. So, looking at this, it's had a trajectory of some of these, again, Asian countries that have had some of these e-commerce stocks and things. It's just been tremendously completely destroyed. The charts are very bearish. You look at things like Auto Home and TAL and things of that nature. Again, this is not a Chinese stock, but this one has a really, really good look to it right now. It has, their customer base. There's a zeal to the folks who really use this, where they really, really love this company. It's kind of like the early adopters of some of these websites or services that just explode over time. The fact that we are now testing a major key range low here, so you had that impulse sell-off and a bounce back to the mid. Now we've been trading in this lower portion today with a buy signal. That's right off the $30 level. That's probably the best buy opportunity right now on the chart at the moment. Again, if it can continue to stay above 30 on a daily closing basis, there's a quick shot to return back up toward about 35, 36, which is the breakdown point here in that midpoint. Maybe it trades in here for a bit, but once it can get above 35, 36, you open up the upper end of the range or back toward the previous quarter's close around 40, 42. You have value right here, which is 39, 34. This is the bottom of value right there on a composite basis as this thing continues to build out. Again, very good opportunity off the key range low. A midpoint retest today is 30.5. If it pulls back to 30.5 tomorrow, for example, that could be an opportunity to buy this thing for a push back to value. 30.5 back to 39, 34, maybe back to the previous close. What if it can get all the way above value? Now you're into the 48s. So I think short term, there's a lot to like about this one just from a short-term perspective back to 35 or thereabouts, 36. The potential to get back to value at around 39. And then the long-term potential of this one, right? If this is like the South Korean Amazon and people are going to love it, then maybe down the road it's much more than 30, 40, or 50. Maybe it's 100, 200 or more. So just some thoughts on this one in terms of reacting to the key range low, getting back above that low. If it can hold the 30 level, it could be nice. Now, say you wanted to play this one for an opportunity into as high as 46. You might give yourself options all the way out to, say, the end of the year. Right now, 107 days to the December expiration, 142 out to the January. But right now, the January expiration's quite a bit of open interest at several strikes. The 30 strike, 4,600 contracts of open interest. That's the 30 strike. Out to January. So we're talking January expiration and the 30 strike right here has 4,600 contracts of open interest today, traded 865. The next one out is 35 here, and that one has 2,800 contracts of open interest today, traded 160. And then the one farthest out, 45, way out here, 4,800 contracts of open interest with 1,000 contracts traded today. That one's trading 80 cents on the ask right now, 80 cents on the ask. But again, if you're giving yourself till January and it's able to make a move up toward 45 in the upper end of this range, you're now $15 in the money and you paid 80 cents. So you can see out to January right now, a ton of open interest there for some of these contracts. Alright, I wanted to take a look here also at Cirrus Logic. This is CRUS. Nice compression phase for this one. You could see the bands pinching here. It's been trading happily between 85 and 75. It's been inside that range mostly since February. There could be expansion due pretty soon. Again, the idea here is that we might be closer to the end of this compression than the beginning, but we still may see a little bit more sideways action first. If we're going to explode through the 85s though with a transition day, it could really open up 100 to 105 very, very quickly. So that's going to be something to watch out for. Not sure we're ready to really explode out of this range just yet, but at some point here very soon, again, we may be closer to the end than we are the beginning now. We may be looking at one of these moves where we make a tremendous rally to the upside. I would say, as always, because this is trending upward like this, if for some reason we were to dip down first, below 75, below S3, and into support, that might be the best buying opportunity on the board right now from a near-term perspective. If we were to sell off there, say October pullback zone, that could provide a serious bounce, Cirrus bounce back to recent highs and likely through those highs. So one to watch here from a pinching basis. Now, I hesitate to talk too much about cannabis here because the cannabis group is very finicky. Here's the cannabis group here as a composite of what I have here. There's others to drop and add. This is one that constantly sees some go out of favor, some come into favor, new ones added. Again, very finicky group. But one thing that is starting to stand out with some of these is the compression phase we've just endured over the last many months, similar to some of these other groups we talked about. That may be indicative of some sort of volatility to be had here at some point fairly soon. I would also say that there tends to be late year movement in some of these stocks and early year movement. So like, for example, this is perfectly case in point right here. You see a move that begins, in October or so, September, October, and ends right here in February. That tends to be the case sometimes where you see that late year rally or early year rally for some of these. So let's take a look at a couple of these. ACB is one that if you just look at the most recent auction here, this is it. $19 is the high end of the auction. The low end is somewhere around 5. You do have something just below that, which is 4, but very strong rejection here. I have an alert that tells me when 6 might get hit here. But here's S3. We're down here near the third standard deviation, below value. We're in a very narrow compression. Again, we're in a spot that if price were to bounce, value is up above here in terms of composite VPOC or VWAP. Composite VPOC is around $10. R3 would be across the range toward 12. And then the top end of the range on these explosive moves here is 19 bucks. So we're getting into a point again where this one's still in the oven, but very close to perhaps providing a good speculative opportunity. And I think if it were to hit below $6, somewhere below between 5 and 6, that could be the ideal opportunity for a speculative entry back toward 10 bucks and maybe higher. Again, if you were to get that windfall move, take what you can get, take something off the table, and then allow the rest to play with house money there. But this is one to keep an eye on. I still think a little bit lower, and then that one may be in play. Now, when you look at Tilray, very similar as well. This one had a huge squeeze. Again, late in the year, this beginning of the year, this is January, it goes from like $7 to 65. Yeah, it's just the nature of some of these, which can be again attributed to short squeezes and things of that nature. But here we are again, where against value, we're over 3 standard deviations below value, and we've built a little box below it. You know, we're in a zone that doesn't look bad. Obviously, there's no major rejection yet. There's nothing to trigger an event to get this thing going to the upside, but purely price, purely value perspective, we're sitting kind of on a support zone here. So let me bring this back. Like, there's a little support zone. Used to be resistance. It broke out. Kind of a little support here. We've got a downward slope to this thing. Can this thing find a way to break above 15 at some point? Because when it can, or when it does, it wouldn't surprise me to see a 30 down the road. You know, yeah, you got this kind of zone right here where you have this range, you have the lower range here. If it's going to lift off this area, it'll go to the top end of this range and then has a shot to go to the top end of the next range. That's 30. So from the current price, there could be a double up ahead for this one. Again, the problem is we could continue to meander around here and mess around before that pop occurs. But I just wanted to get these on the radar here because at least a couple of these bigger names are below S3, and when you are looking for value opportunities below the 3rd standard deviation of value, it gives you a much better odds for success as these ultimately return back to value, you know, at some point in time. So a couple of them to keep an eye on from the cannabis group there. And another group here that perhaps not a lot of folks will pay attention to as much, 3D printing. Kind of one of those newer groups, just like many of the ones we talked about today. EV vehicles was new at one point, cannabis was new at one point, crypto, right? Several of these. The same thing for 3D printing. Look at this thing go as a composite from 20 to 85 very quickly, just an explosive move. And after you get something like that, there tends to be obviously the reckoning where it comes all the way back. We may be done with that reckoning now, and we might be looking at a bounce to come. So if we look at some of these in this group, there's a few that I wanted to point out. The first one is, I believe it's MLTS. And let me plot it over here. Oh, MLTS. Is that the right one? Oh no, it's MTLS. There we go. So this one right here, again, saw the major move up, major move down. It's currently below, well below S3 here, hanging on 20. A return to composite value all the way back up here would nearly be a double from where it currently is. So that doesn't sound like the one I wanted to look at. Fargo. Fargo's much better. So Fargo is one that looks a bit better. This one is one that, again, already went below S3 here, popped back up to S2, failed new low, in play here. And now, again, if it can hold that S3 here, there's a shot to return to value, maybe to the top end of this range. That's an 80 print. So you're looking at a 70 to 80 move that could be in play for this one over the course of the month. The other one, okay, so here's a shorter term idea. This is NNDM. Another one that's fairly cheap. So you can see kind of $5 is that key level right there. Here's your S3, so that's your third standard deviation. There's a pinching phase here. We did see price drop below previous lows here and bounce back up above S3. So it's trying to make a move right now. Again, if it can continue to hold this $5 level, $5.50 even, there's a shot to return back up to value here, and that would be a really good return back toward about $8.50. So just, you know, from a shorter term perspective here, some of these may be overdone. They got a pinching phase going on, and there could be a little bit of a bounce to come out of these, but, you know, these have been beat up a little bit here. So you definitely want to watch for signs of clear rejection. And one last one here. Actually, two more. This is Draftkings. Draftkings right here got a recent break back above the 55 level. Good transition day right there. The result after that month of strength was a higher value relationship where the midpoint is right near the breakout point. Draftkings has been one that has been left mostly unscathed compared to some of the other casino resort stocks, and you know, again, this one online betting and things of that nature. So this one might have a pretty good fall, or a move this fall, I should say, if it can continue to hold that breakout point of 55s. Seasonality may come into play based off of, you know, the NFL beginning and college football and other sports coming into full swing here. Higher value relationship, a pullback into 55, and you get your bounce toward about 65, maybe higher. But for the next month, this one might be good on the next pullback, and you may actually see a little bit of residual strength here beyond that as well. That is Draftkings. And then the last one here, since we're talking casinos, LVS. We talked about LVS last. The last monthly outlook right here. So we were a couple days in. We were talking about the 42, I believe. And this was one where I mentioned probably it was in the oven. It's not quite ready, but it's getting close because there was no actual rejection. We were just in a major area of support. Eventually, we got below 38. One daily close, two daily closes below 38, and it don't stay below there for long before we got this extreme pop back up. That's a tremendous move right there. A tremendous move back up so quickly after months and months of getting crushed. It's the biggest move we've seen in a long time since the early move in February. That's pretty significant. That's kind of what we were looking for last month, was some sort of rejection down here, lower high, lower low, and then back through that high, back through the 42s. That looks awesome. So here's how to play this moving forward. You have a lower value relationship with a higher close, a change of bias, which means that any pullback into this pivot range here becomes an opportunity to buy for a new high later on in the month. The level in question here right now is 42s. If this thing pulls back as deep as 42, 42 may be a good entry for a move as high as 52. Maybe not by the end of the month, but over the course of the next, say, 4 to 6 weeks. it has a really good shot to get back to kind of this breakdown point. That'd be about a plus 10 just there. And then think about the longer term idea into the end of the year. That could provide a great bounce back to value, which is back toward 57s. So when depending on what your time frame is, if this can hold 42s, there's a short-term move to 50 to 52. You look 2 to 3 months out, you could be back toward 57s. So a very nice move there. And I see some other ones coming through right now. Wells Fargo is one of those. Yeah, Wells Fargo took a tremendous drop. The idea here, news related, financials related. Yeah, that's tremendous. I didn't see this one till the end of the day yesterday. We mentioned it in the room early today, and it elongated on that move. Whenever you see just an explosive move like this, you tend to have to go to an edge. You tend to have to take out some lows in order to maybe see that bounce back point. But I would say that when you have that strong high here, you're letting this thing oversell itself until you get that point of rejection where you say, okay, that's a strong low right there, and now you're going to snap back to the midpoint of that range, and that'll give you kind of that midpoint target. So there'll be a way to play the snapback of this one. You'll likely get a new key range after this move. And it's coming into a zone here where it could happen soon. You got a rising 200, you got this major CLVN and recent lows. We could be looking at a reactionary move here sooner than later. If we're going to come down here and grab that previous quarter's low, that would be significant, because we still have half the move to go from the previous quarter's range. So I think we have a good shot to see some sort of reactionary move where it snaps back on this one. Palantir. So yeah, here's another one. Here's Palantir. This one's moved well at first and then not as well later. It has been one of those kind of lazy movers during some times, and then sometimes it moves really, really well. We caught it early on in this move and talked about all of these various edges where it can react, and it did some great movements. Here recently, it's been very reluctant, very choppy. The flow has been to the upside. So based off the key range here, it's done well. The behavior hasn't been as great. So here's the key range low. Here's the key range low. And again, you can see strong low here, strong rejection, strong rejection, strong rejection, a trap below it, holding here. So the idea before was, hey, we're holding here, so we should see a move up to 27.33 soon. And we've still been doing it, but it's been very slow. Maybe we've been spoiled, or I've been spoiled with some of the moves in the market. There have been some extreme moves very quickly. But initially, the 21 suggested a move to 27, and we're still doing it. I mean, maybe we get it close soon. I mean, it's almost $1 off that level. So we're almost there. But that's the range. Once we get there, we could easily turn right back down and continue in here, chopping around VPOC. It's above 27 or 28 where it opens up the next zone above, and that's going to be 27 to 33 half. So that's the zone right there that we'll be talking about. Is if it can get above 27, 28, it opens up 33. If it rejects at this edge, you turn right back down and stay within the range here, chopping around VPOC. Another one here, I don't believe I looked at this one a little bit earlier, was Kellogg. Kellogg here, we looked at this one yesterday as a short-term rejection candidate. Had a great rejection yesterday, a great midpoint retest today. doesn't have a whole lot of range to work with, but the idea was 62 to 67 could be in play. That's been the range so far, as long as it can hold these 6250s. May not be all in one straight range, but it made the last two passes very nicely. Before that, quite a bit of chop. We'll see which Kellogg personality we get. But so far, it's been able to hold the 200 on most of these passes and has been able to bounce back up within the range. So thinking that this has a good shot to continue. 62 has been a significant area of support. So a failure to hold 62 would be significant in terms of market structure. Oh, do I have the volume profile set to a chart or specific time period? So I have it set to the chart in Thinkorswim right now. So when I have my standard daily chart would have 5 years. So basically, this would be a 5-year volume profile. On the intraday, I'll look at a 1 and a 5-day profile. 60-minute chart, I'll look at a couple of months at least. And if I'm looking at a weekly chart, it's usually a 10-year profile. Very good question. All right, well, I'm going to go ahead and call it a monthly market outlook for this month. About an hour and 11 minutes here locked away. This is recorded. I will post this here as soon as possible as well. We've taken a look at a lot of various industry groups, a lot of various stocks, a lot of various groups that are compressing here that could be due some movement here toward the end of the year. And again, once we come into Q4 here, that's about the time where you start to get some nice volatility heading into the end of the year. So we'll see how this plays out heading into the rest of the month. Again, thank you all very much for joining me for the monthly market outlook for September 2021. Have a fantastic rest of your day, and I'll see you in the trading room. Take care.